Hello traders! Today is Wednesday, June 22nd. Welcome to this live intraday strategy webinar on SB Trade Desk. We are about 30 seconds away from the retail sales print for the month of April for Canada. Eileen will definitely go over that dollar peso trade. Yeah, it's an interesting setup. I was watching since the start of the week, but we'll review that in a moment. 15 seconds out here, guys. We're looking for a nice build. Okay, we got a negative read last month of 1%. X auto, if you strip that out, was negative 0.3%. We're looking for a nice rebound. Dollar CAD, if you recall yesterday's setup, we are looking for a possible drawdown for entries on the long side near the low day close for the year, which comes in at 27.22. Low day close for the month comes in at 26.90. So we're looking to see if we can see that weakness on the back of the release. 0.9% stronger than expected. So look for that downside move here to accelerate possibly on some positive CAD data. X auto, if you strip out that, comes in at 1.3, almost doubling the expectation. So should fuel the downside move we're looking for. Again, near-term support targets of interest for possible exhaustion at the 2016 low day close, 127.22, backed by 126.90, both areas of interest. So we'll continue to monitor this one during the course of the webinar. Here's what it looks like on the 5-minute and the 1-minute right now. We're looking to see some exhaustion here as momentum really was unable to push too much far below 40 overnight. Still think we can get that drop into support. If you look at this, guys, you're also looking at a longer term, or I wouldn't say longer term, but basic channel support. If you take that parallel to the highs, it actually caught the highs perfectly. So that same slope caught the lows, also converges in this key region here over into the start basically of US trade. So continue to see if we can get a move on this one to the downside towards that support target. All right. Well, with that out of the way, we'll continue to monitor this, guys. Welcome to this pre-Brexit Wednesday session. So obviously, we're going to get that market lull that'll probably be starting to take into effect later today into tomorrow's session. Don't really expect much. We will have another webinar tomorrow morning, guys, ahead of the Brexit count. We'll go over some of the sterling crosses and what opportunities may arise on that release. I do want to prompt caution across the board in all your trading, as this is an unprecedented event, which could have unforeseen, market moves if the Brexit vote is, or if the vote comes out to leave, which is sort of the bigger risk that we have here. Remember, markets are largely pricing in a stay vote. Anyone who's arguing that hasn't been looking at risk assets, hasn't been looking at the pound. We are not factoring in the possibility of a leave. So if they do decide to stay, the actual implications or the volatility on the back of that decision may not be all that exciting. If they decide to leave, this is where you can expect to see some of that volatility really start to surge. Again, a quick note that you should expect to see spreads really blow out on all the sterling crosses. I already noted yesterday that whatever broker you're using, you do want to check because likely there like a very strong likelihood, that we have or that they have increased your margins. I know FXCM has done that already ahead of this release, so keep that in mind. Adam, great to see you. Good morning to you as well, sir. All right, so I'm going to have this chart here on the right, guys. I'm going to continue to monitor it, see if we drop into that 27.22 region. We'll come back to it. But this is what the daily chart for dollar CAD looks like, just to show you. So if I snap these levels real quick, if we look at this basic formation, this is the same formation that we were looking at on the 30-minute chart. This is what this formation is. Okay, these trend lines. If you look at that, we broke through the median line here on a sloppy break yesterday, but pushing lower. So again, the lower bounds of the ascending channel comes in right around that region, sort of the justification of what we're looking for on the daily chart that's represented by this. All right. So let's see if we can't get that 20 pip drop to the downside to find that low day close, for the 2016 calendar year. Okay, morning to you, Horace, as well, sir. Great to see you in the room. So We will come back to dollar CAD. Let's go over really quick the dollar index and where that stands right now. You did see a nice rebound. We talked about this yesterday as it was coming into a major key support barrier. Really nice rebound yesterday, as expected, to the upside. Here we are once again starting to cover it back to the downside. I'm not really very excited about taking short dollar exposure as of now. We'll go over the independent trades in a moment, guys. I still like the Aussie to the upside, and I still like Euro to the upside on a dip lower. But for the dollar index, you really need to be mindful of any short exposure while above that 11,000. At this point, I'm going to stress 11,730 into 11,721. So let me just adjust this right here. And we'll scratch that 786. Keep this nice and clean. That's sort of the major key region that you need to keep in focus here for the dollar index. All right, so you're at risk on the short side while above this region. Again, a break below, there's really not much on tap until the 2015 April low. That takes you into 11,634. But as it stands right now, still cautious on trying to get excited for short dollar exposure. Would much more, or would be a lot more comfortable if we were able to finally fill that gap, move towards the upper parallels. Nice area of resistance there for possible re-entry in the short side. That being said, look for support into 11,721, 11,730. Any questions on the dollar index? Here's what it looks like on the 30-minute chart. Again, a quick reminder, I see some new names in here today, guys. If you have any or would like to see or keep any of the charts that you see presented, there's a camera button in the top right-hand corner of your GoToWebinar screen. Go ahead and click on that, and you can take a snapshot of any of the charts that you see presented. Quick reminder also that we have Jamie Setley on tap later today for the midweek strategy webinar, so that is also slated ahead of the Brexit vote tomorrow. So here's what the 30-minute chart looks like for the dollar index on the near term. Okay, just a quick look back. Daily, 30-minute. Within the confines of just this near-term decline, you can see some nice parallel action here off the highs. Caught the lows more or less. And again, that gap would necessitate a move back towards like 830, this region here, just to fill the Sunday gap that we made. So we'll continue to look to see if we can find that bounce higher in the dollar index to inevitably sell with the broader bias weighted to the downside still, while sub 11,830. So that is the Dow Jones FXCM dollar index. Again, equally weighted Euro, Aussie, Sterling, Yen. So keep that in mind as we see, or as we get through the Brexit campaign. It's likely that you'll see Sterling really be the biggest mover of the index, weighted, 25% of the broader indice. Okay, let's jump into yesterday's intraday update. So also, aside from dollar CAD, which we wanted to highlight ahead of today's retail sales, obviously, again, those came out much stronger than expected across the board. Also, do want to note one quick thing that we didn't note earlier is that you did also get an upward revision to the previous month from negative 1% to negative 0.8, slight bump up higher there, from negative 0.3 to negative 0.1. So broadly speaking, pretty decent print here for Canada, really relaying, again, strength in the broader consumer market. The other highlighted trade that I'm looking at still is Kiwi, and I think this one is another one that we want to be mindful of over the next few days. The daily chart that we've been following for months and months and months has been this, and the region of resistance that we highlighted on the radar charts back at the start of the week, right here, highlighted this major key zone of resistance. And here we are right now, knocking on the door. We tried yesterday, came back abruptly, and here we are yet again trying to see that major resistance. You're looking at a basic, there's been a slight adjustment here, which I'll go over with you in a moment, but you're looking at basic trendline resistance. Okay, this is a slope line that's mirrored off of slope support. You have a key 618 retracement, 7152. And you have that 2011 low day close, 7175. We're testing that right now. This is resistance. more or less, I'm looking for short exposure from right at this level, guys. So we'll continue to look for short triggers heading into the U.S. Open. I would like to see a little bit more of a prominent divergence signal and momentum, which we're not getting. Remember, this is based on the close, so until today's candle closes, we can't make any assertions as to what momentum is doing. That said, here's what the 30-minute looks like. Oops. Okay, so you are getting some divergence so far as it stands right now in near-term momentum, price action making a higher high, the oscillator holding those highs, which is still considered momentum. Remember, we went over a nice discussion on RSI yesterday about how we're looking for extremes in price, not extremes in the oscillator, extremes in price, meaning a new high or a new low, to not be reflected in the oscillator. That's exactly what we're getting here. Again, this doesn't have anything to do with timing, so we can get ongoing divergence for days, if not weeks, before it turns over. That said, I am looking for some near-term triggers. So the slight adjustment we made to slope yesterday was as opposed to using this one, which is what we've been working with here in red, which also presented some really nice resistance. I just removed that to keep the chart clean. I'm working with this purple one, which is the new low that we made late last month. And if you take that off the highs that you made for March, although we did probe through in April, you could see both March highs, the May high, and both of these highs along that same slope. So it gives us a little bit more conviction. You know what? This might be a decent gradient the market's working with. Also, it highlights that major key resistance that we've been looking for. So aside from the upper median line parallel, aside from the 618 retracement, aside from the 2011 low day close, you now have also basic slope resistance. Now, if the dollar breaks support, or if we do see the Kiwi continue to rally higher, the break from here has very clear targets as well. 72.80 is just a soft pivot in price. I don't want to stress that. The major area of resistance is all the way up here, 73.78 into 74.15. That represents a 1618 extension off the low, a 764 retracement off the high, and a decent range of resistance here on a breakout to the upside for the Kiwi. Okay, that's on the daily chart. For the 30-minute, you do have some closer near-term targets on a topside break that I've kind of just eyed out over price action from the last few months. 72.23, 72.80 as we spoke before, 73.21 is the soft pivot, and then again that key resistance at 73.80, 74.15. So again, if you need to take a snapshot of this, do feel free. Any questions on the Kiwi? We're still spent on Kiwi for the rest of the week as far as economic data is concerned. There's nothing on tap until next week. So again, look for broader market sentiment to be driving this. Questions on Kiwi dollar before we move off? We're flying through these today. Let's take a quick peek back at dollar CAD, see if that's doing anything. Okay, so now that dollar CAD is broken back below 40, the way you want to play this, guys, is you don't want to start chasing it and buying it from here, in my humble opinion. I would still be looking for a move lower. Oops, bear with me one moment. I'd be watching both of these triggers near term. And on a break below 40, you want to see this spill out into the 30 level, or at least give us a topside trigger before trying to fade it. And again, we'll be looking for those key support targets just lower. About 20 pips to go. Okay, next up on tap is let's go over the radar charts. I do want to talk about Aussie dollar. Let's do that real quick before we move into the radar charts. Here's what Aussie looks like on the daily chart. Looks like we're trying to make a move through the 50% retracement. Kind of is, it kind of irked me because I've been trying to get long this thing all week long, and I keep missing the entries. So there was another entry last night on an outside. That wasn't an outside reversal, but it was a reversal candle here in um, about a couple of hours into Asia trade. You saw a topside break of the opening range. We've continued to move into the highs ever since. Momentum remains pretty darn constructive. Above 60, 40 hold to support, above 60. Remember, guys, our basic rules for RSI. In nice uptrends, we like to see support at 40. When the market is in a downtrend, we'd like to see resistance at 60. So the fact that we're above 60, held 40 support, and right back above 60 keeps the momentum profile constructive for the euro near term. Let me snap these levels for you. All right, so just a picture of where the Aussie is sort of in the broad scheme of things. Going to continue to favor the long side. We brought up the invalidation, the bullish invalidation yesterday from 73.60 to 74. I'm still going to leave it at 74. Remember, we need to duck down just below that to actually fill the gap. So I'm still going to keep this in sight, but ultimately I'm looking for a rally towards 75.70, 75.90, 75.90 being a special area of interest with that April low day close that we made. That's right here. So you also have a couple of different trend lines or median lines that all converge up there. The median line off the low. Later in the week, as we head towards Friday, you also have the current operative descending median line formation, and that basically highlights this key region. Look what's just below that. Key 618 retracement, 75.70. All right, so 75.70 into 76, basically the major key resistance here for Aussie dollar near term. Continue to favor buying pullbacks into that region of resistance. And as far as Aussie data is concerned, I'm pretty sure also we're spent on that front. Yep. Nothing on tap there. One quick segue, guys. I do want to just bring this up because we've been following this for the last couple of weeks, and I do just want to note that we have seen a slight uptick again in Fed Fund futures which just took it back. So this was at 50.1 right ahead of the webinar. It just sunk back to 49.9, and we'll continue to monitor this, but the outlier is the 2017 print, and that's what everyone's focused on as far as I can tell reading through the headlines on some of the financial publications, is whether that 2017 early interest rate hike is really on the table or not. Remember, the Fed still postulates, and they still say that they're primed to hike rates this year. All right, markets are not saying that. Market expectations are not saying that. So again, just discrepancy there, and I continue to monitor this for the dollar crosses. By the way, here's what the relative performance for the greenback looks like today as well. We're down against all its major counterparts. Biggest gainer on the session is the com block with the Aussie and Kiwi up 0.9% apiece. Euro up 0.6, CAD up 0.57. We'll continue to see if that can drop into 27.22. Sterling and Swiss also slightly higher in this session. Can you go over some possible later entry area triggers for Aussie dollar? Thanks. I sure can, Eileen, but I don't really have anything really forthcoming from this point. I mean, again, I keep kicking myself, but that long last night, I was awake, should have taken it, was sort of your ideal attempt to enter the long side again. From here on the long side for the scalp, geez, I would need to move back towards the lower parallel, the weekly open. If we come back towards the lows that we made in Asia and we get a decent trigger against that low, but from here, it's hard to get into a new position trying to attack the long side. And remember, risks pair sensitives like the Aussie, like the Kiwi, like gold. These things will tend to react very strongly as we head into the Brexit vote tomorrow. So keep that in mind. If you have any open positions into that release, the likelihood is we'll probably won't get the final vote tally, guys, until about 2 a.m. Here in New York. Um, so I will try to keep you guys updated to that. I'm maybe working an overnight shift just to keep up with you guys throughout the release. It's obviously going to be a tumultuous night for anyone who's trying to trade this live, but I will keep you updated on SB Squawk as much as I can. All right, so that's the Aussie. We've been looking for long entries all week. I hope you guys got into some of them. If not, keep that powder dry, and let's see if we can't get a decent pullback to get back on the long. But at the end of the day, if it does break higher from here, don't go chasing. Don't go chasing. Adam says, awesome. Tomorrow's going to be a long day. Yeah, I can't promise just yet, Adam. I have a lot on my plate, but I have been contemplating it, and it not just to keep the feed sort of update and tell you guys what's going on, but also to see if there's any opportunities for us to get into anything. Again, as I told you yesterday, guys, typically with these kinds of releases, the smart thing to do is trade into the release, not to trade the release. Seeing as how this is not going to be, a 5 o'clock print or a 2 o'clock print, but rather a series of polls that continue to close. It's going to be like, if you guys watch CNN here in the stateside, as you go through the campaign, like when they were doing the primaries, key race update, and they keep telling you, oh, this district closed, the poll tallies this. This is how the data is going to be released, okay, on Thursday. Starting at Thursday night, late in the night, you're going to get, okay, this district is reporting, this is what the vote count is. This district is reporting, here's what the vote count is. And the aggregate, like I said, should be somewhere in the range of 2 a.m. Eastern here in New York. Michael, do you personally update the feed? Adam, the feed is updated by myself, by Jamie. Sometimes we have interns who will update it with just the basic information that's coming out. But yeah, it's mostly me and Jamie on there. So we'll keep you updated. With the intraday charts, Adam, yeah, that's all me. Tomorrow's going to be a long day. Yeah, I agree with you on that. How about after the release? What's expected? Well, Horace, I can tell you that I'll lose my voice after the release because you can see it happening now. Excuse me one sec, guys. All right, we're back. After the release, Horace, it's really going to be determined on whether they decide to leave or not. Again, this is just conjecture at this point because we've never seen something like this royal markets. But if they do leave, the risk is for us dramatic sterling sell-off. And then I would actually, not on the initial release, but inevitably, I'd actually be looking to fade that still. I don't believe this whole notion that sterling is going to drop on a 50% move because of a Brexit vote. There's going to be a lot of concern. It's going to be a long process, but I just don't see it. And from what the technicals are saying, you want to be very mindful of that kind of mentality. Let's jump on the sterling and take a look at it from now as we head into the release. So we're knocking on the door one more time. Yearly open 147.31. We've been watching this level all month, last couple of months, I should say. Now we've made a fifth attempt to break through and pulled back again on a reversal day. It's been the same story every time we've tried to make an attempted break of that topside move or of that yearly open. So I'm still mindful. I think you get some exhaustion here of the long side for sterling. Here's what it looks like on the intraday chart. It's going to look ugly. So this time it's not my fault. Don't blame the chart. It's the pair. It's going to be a little ugly as we head into tomorrow, but you can see again the chop at the yearly open. Every time we try to get through, dramatic pullback, failed attempt, dramatic full pullback, throw over, dramatic pullback, and here we are again trying to make another run towards it. So, sterling's notorious for the throw over trade, a break of resistance and a pullback. For me, I really wouldn't want to encourage you guys to fade this move into the Brexit. But to be completely frank with you, this was a decent opportunity yesterday on that rally. I know that Jamie, while we were here in the webinar on that spike into a high, he took a short on that, played it for a near-term move to the downside for 30-plus pips. The opportunities are there, but we have to be mindful that we're very short term. You don't want to go looking for a sizable move on a pair that has a absolutely paramount event risk in about less than 24 hours, where we'll start getting, or a little bit more in 24 hours, we'll start getting some of those that voting started. So just keep that in mind for the British pound. A basic 236 of the advance off the low takes into 46. Okay, 45.88 being the February high day close, also an area of interest for some near-term support. And it's really that region right here. If we do break below, I think could be the onset of a near-term recovery for the dollar, a near-term pullback for the British pound. That said, guys, I'm still treating this as a constructive trade. We're bumping up against resistance, and it's a pretty big region. But if it does breach, keep a couple of levels in view. Basic trendline resistance off the highs comes in just higher than we made yesterday, around 48. You have a 50% retracement of the entire decline off the June highs. That's 48.80. And then a decent pivot in price here right around 49.50 or so, March 18th close. Oh, somebody moved that. Excuse me. 49.75. I thought it looked wrong. That's the March 18th reversal day close. Does that make sense, guys, for the British pound? Any questions on the pound before I move off? Again, we'll review all the pound crosses again tomorrow morning right ahead of that. But Adam says, do you have any open trades on sterling dollar? I personally do not, Adam, at this point. Francis says, since we have not been able, I think you mean to break 147.33 for a while now. Is it safe to say that when we do break, it will be a very strong support? I would agree with that. Yeah, Francis, I would agree with that. And what Francis is basically saying is, since this has butted up against this region and failed so many times, that once we do clear it, shouldn't this offer some support? And absolutely, that's your classic technical analysis. Basic resistance becomes support. Nothing special about it. So yeah, I would expect if we close above that level to do see that level as support. The only thing I would highlight, Francis, is it's the pound, right, man? So this thing could come right through, just as it does here, and runs through resistance, runs through resistance, runs through resistance. Could do the same thing on the downside. So what I'm meaning to say, Francis, is you don't want to be so stringent and say, okay, I'm going to put my stop at 47.20, right, 10 pips below, because that should hold as support. Not with the pound. Okay, not with the pound. Yeah, I wouldn't put it past this thing, even if we break the yearly open, to come back and to test that 100-day moving average, or excuse me, 200-day moving average, 146.81. Wouldn't be surprised if we get a dip into that region again. You know what I mean? So give it some cushion on both sides on this, Francis. Again, professionally traded market, well known as the biggest fake out ever. So just be, mindful of that if you're trading, and especially in the environment we're about to head in, where spreads could, widen out 100 pips. And you think I'm joking when I say that, guys, but I've been on the desk and seen it happen. Liquidity providers to a lot of these banks have already started to prompt let me take that back. Liquidity providers to all these brokerages have already started to basically prep these brokerages and say, look, the liquidity might not be there. So with that warning, I do want to just prompt everyone. If you have open positions, it's a good time to reduce your leverage as you come to your near-term targets here. It's a good time to keep that powder dry and leave some margin open as we get into this major event. And trust me, after this week, I never want to say the word Brexit again, nor do I want to hear it. I have a feeling that's not going to be the case, but that's sort of the idea we want to work with. Francis, makes sense? Francis says, got you. All right. Okay, so we'll see if that pound has something for us tomorrow. And this also, going in line with some of the comments or some of the conversations we had in here yesterday, this is also a good example of bearish divergence. So Eileen, lesson 2. Here's another signal from the start of the week. Here you can see just an amount of higher highs, numerous higher highs, as momentum makes lower highs. So a nice turn there to the downside. Could have been the play. That could be all it's going to give us. and momentum held 40 like a charm. So you haven't really gotten the conviction for a turnaround yet. We'll want to see this hold, and a decent trigger is forming off the lows here, which could give us some guidance on a reversal. Yes, you got it, Eileen. Says, see it. If an uptrend area, look for RSI tops. Graham says, hi, Mike. On the subject of divergence, how are you feeling about Euro Aussie right now? You know what? Let's take a look. That was highlighted at last night's radar chart. Look, I do like the upside, Graham, just because of where we're trading. It's at such a critical level of support. So we'll come back to EuroCAD in just a moment. I did highlight Euro. Oh, I typed that wrong, guys. This is Euro Aus, not EuroCAD. I'm sorry about that. I'll fix that in a moment. But the major thing I wanted to highlight here on Euro Aus is, yeah, you're coming to a big, big area of support. Nice confluence support. Here's what Euro Aus looks like on the daily chart. So here's what we looked like last night. And I wanted to highlight this 50% retracement at 50.40, basically 50.39 right there. We actually finally made a tap of that just now. I'm sorry, just checking dollar CAD. Still a low of 27.40. But for Euro Aus, Graham, nice convergence, okay? Not only the 50% retracement, but you also have that lower median line parallel, which has been offering some really nice pivots here as well, and current operative basic channel support. So we take a parallel off resistance to the low that we made on the open of the month for June. You can see the lows converging right here. So I am looking for some support. Another thing that could offer some conviction on seeing a rebound here is this. You have momentum coming into 40. So if we find support at 40 and momentum on a closed basis, and you get some long triggers on the near term against 50-40 or thereabouts, I am looking for some possible move higher. Now for this trade, and I want to make this clear, is you don't want to get too excited on the upside till we break out of the descending channel. My initial targets on such a rally would be first the low that we made here on the 15th, and that low is 51.36. Then the 200-day moving average, and that would take you as high as 52.50. Okay, those would be my first initial targets on a scalp to the upside, or it wouldn't necessarily even be a scalp, just for a trade to the upside. That would be sort of where I'd start to wrap it up. Whether I want to play it past this, I'd want to see this break tested as support, then a move off, and that's would be where the entry would be. But any long exposure that you look for, guys, I'm not looking for anything outside of this channel until we finally break. Now, if it breaks to the downside, and if you get a tight stop on this and it gives way, the next key area of support is a huge confluence region, absolutely enormous, 48.80 into 49.12. You have the 2016 yearly open. You have the 618 key retracement of the advance off the lows from April. And you have a 1618 extension from the decline off the highs, and they're all stacked up right here. So a pretty sizable move to the downside if we break. Huge inflection region on a rebound play, which is what I'm looking for. If we do get an upside pop, look for those lows from the 15th. Look for that 200-day moving average. Channel support is going to be the near-term bearish invalidation level. Here's what it looks like on the 30-minute. Any questions on the daily before I move off? I think this one's pretty clear, Graham, but big confluence region of support. You'd like to see some give back, right? Here's what the 30-minute looks like. I was working on this also this morning. Again, you're seeing that final dip, key region of support, same region right here. Beautiful trade, and that we're getting some divergence. Actually, this might be an entry you guys want to look at into the open if you get one more pullback here. You kind of stretched off the lows already, but you're looking for about 32 pips, 34 pips per scalp. You're getting some nice divergence into those lows. I wouldn't put it past this thing to see one more stretch into the low, into that trend line before reversing, okay? So keep that in mind, but broadly speaking, I'm looking for some topside triggers here in Euro Aus. Yeah, it's not going to be a trigger I'll be happy with. Yeah, it's going to have to be a 50 break to the upside here. Okay, so here's what the 1 minute chart looks like, and here's just a quick run through on like some really micro analysis when you're looking to get into these trades. So the green range you see here is the London opening range, or is the London range, not the opening range, just the range. So again, remember we talked about this last week, the opening range reversal trade, where the market opens the market, you set a low, you set a high. Again, you test the low. Again, you fail at the highs. A break of the lows, this typically would put you bearish. But the reversal to take out the opening range high, if we do push through, would be a session opening range reversal. A little bit harder to trade, but certainly some of those can be some really nice conviction trades, especially when they're coming off support. So look higher in Euro Oz. Look for some long entries as you head into the US Open. Again, initial entries or initial targets are going to be that low from the 15th. And then that 200-day moving average, which comes in line pretty close with the weekly open. All right. So I do like support here, and I'm liking a move higher in Euro Oz. Graham, does that help on Euro Oz? Do you have any specific questions on this? He says, thanks. All right. Yeah, good eye on the divergence. That's your favorite divergence, my favorite divergence. And one other thing I just wanted to highlight, guys, and I say this, if for those of you who've been with me for a while, you've heard me say it before, but when you're looking for divergence, the closer the divergent points are to 50, the stronger the signal is. Okay, meaning if I got two divergent points up here above 70 or down here sub 30, right? If this was a lower low here and a higher low here, that would be a weaker signal than divergent points that are closer to 50 or within the range, let me say, of 40 and 60. Those will be much, much stronger signals. So keep that in mind, especially when you're looking at a 5-minute chart or something close and you see some divergence up at 80 or above 70. These are weak, okay? We don't want to stress those. The closer the divergent signals or reference points are to 50, the better we'll be off as far as taking that trade. Okay? That is Euro Oz at support, looking for long triggers. I like a move higher. Let's jump into Euro CAD. I see some questions on that as well. We talked about that also in yesterday's webinar, although we labeled it wrong, or in yesterday's radar chart. Here's what Euro CAD looks like now. And if you guys remember, we actually put this together right here in the webinar. Here's what Euro CAD looks like first on the daily chart. Okay, not really much to look at here. The only thing that you really want to pay attention to is that key support at 43.20, 43.30. Obviously, the monthly open comes in at 45.70. That's near-term resistance. And we talked about, the moving average crossovers. We did that about in crude yesterday. You got another one here in EuroCAD earlier in the month. Again, these are long-term signals. Don't always pan out. Tend to be bearish on a move like this, but certainly we're coming into some support on an expanding range. Here's what EuroCAD looks like on the 30-minute. Oh, we're making it there. We're making it there. So if you guys recall, we were getting some divergence into the lows. No. The support confluence, right. So yesterday we highlighted this support confluence right here, okay? You have the median line coming off the high. You have a 764 basic retracement, nothing too fancy, but also a sliding parallel off that high from last week in the early session of last week's trade, all converging right here. Okay, so the immediate downside bias was at risk, and that's what I noted yesterday in the radar chart. You actually did get a decent rally from here in overnight trade right into that key region of initial support, or initial resistance rather. That's where I would have cut out the trade. Now post CAD data here, you did see a run at the lows again, and here we are probing the highs. This is a region of which, if we break through, as you read yesterday, is going to be our near-term bearish invalidation, okay, 44.60 right here. It's basically the opening range low for the week. So if we do clear that, I'm going to look to fill the range from Friday's gap, which wasn't that big here. But you're basically looking for 44.98, 44.99, and then up into 45.50, which is the weekly open. Also note that that momentum trigger we were looking at yesterday did give out on that rally. So again, another nice move here. This actually broke out in early London trade, even more so than what we just got. And that was right off support. So a really nice trigger to the upside, stop against the low. Again, you're looking for about 32, 35 pips per scalp here. Look for a break above 44.60 here to clear the way for a more significant advance to the upside. But it looks, and this is something you want to pay attention to, it looks like these sliders are working really well, right? All the same slope. Horace, any questions on EuroCAD or anyone else in the room on EuroCAD before we move off? Still like it. If it pushes through 44.60, look to maintain an upside bias on this pair near term. It bodes well with what we're looking for on dollar CAD, with what we're looking for with broader, CAD movement, getting the nice move and the rebound there. For EuroCAD. Any questions? You long on Euro CAD? Adam's asking. I actually got stopped out at break even right on that release. Yeah, I was long. I booked a little bit of it, or I had a limit overnight, which hit at 44.20, just below that key region. And then that was for half the position. The other half of the position was at break even. It just got stopped out at break even and rallied. So look, I would rather take a trade like that any day of the week, a break-even trade on a rally. Heading into an event risk, I'd rather do that than push my stops out, and risk taking a loss on a trade where I've already booked profit. And that's a rule of mine. If I've already booked profit on the trade, I'm not going to eat a loss. That net position will never be a loss for me. If anything, the rest of the trade will be at break even. If that happens and I still like the trade, great. I'll look for another entry. I'll look to get right back in, no problem. But I'll never take half of the trade off and end up with a net loss on that position. That's just my personal sort of take on things. Horace says, got it. You were right. Cheers on that, Horace. Mir wants to look on Euro Key, is also coming to support. And also, what about the Euro Pound? Ooh, Euro Pound. Yeah, you sparked my interest there because I was looking at this yesterday. Look, Euro Pound's going to be a huge player. I'm going to be paying close attention to this. As I said, the longer term implications of a Brexit are actually have a little bit more of a dramatic precedent for the euro. So this is a pair which is at support. If we hold this support, or even if we get another spill back into 75.60 real quick, note that you have not only the 100% extension there, but also the 200-day moving average is right there on that same level. I wouldn't be too surprised to see this, start to move higher. So let me snap the levels real quick. Here's the broader picture for Euro Pound. So you can see we were trading broadly within this nice ML formation. The median line giving us some really nice pivots and breaks. The lower median line parallel catching the lows. The upper median line parallel catching the highs. Within that, we have this embedded structure, which is on the ascent. Okay, so from this, look where we're trading right now. Right at the lower median line parallel. It's a confluence 786 retracement. And former trendline support. We closed below it yesterday, but still going to be significant heading into today's trade session. So we're at support. Am I going to take a stringent sterling short position on a trade that's using sterling pips? Nah, not ahead of that data. But it's certainly something we'll be looking at heading into tomorrow. Adam, or who was asking about this? Mir. He says we're coming into support as well. I agree with you that we are coming into support on Euro Pound. Am I willing to take a stance on this ahead of the Brexit? That's That's a gutsy call. Yeah, you're getting some slight divergence into the lows here, actually. Adam says, have you stopped talking? It's quiet. I'm sorry, Adam. I'm just looking at the chart um, for the 30-minute here for the first time in a while. Looks like we could be putting in some sort of near-term low. And I'll tell you what, so look for a momentum sort of push above 60, which we haven't done all week. In fact, the last two times we've approached 60, we've seen some pretty mean dramatic drops. Real slight divergence, like super, super slight, like maybe a pip apart on the bottom here, but a decent divergence signal in momentum. So yeah, I think it is primed for a little bit of a rebound. I wouldn't be looking to get too complacent in this trade, though. Okay, bear with me one sec, guys. Let me clean up the levels just a bit. Oops, wrong retracement. Okay, these are the levels I'd be looking at initially. Mir for the euro pound on a rebound to the upside. Your first area of initial resistance would be right around here. So you're looking at the median line off the high. You're looking at a basic 236, also of that same decline. Then this is using an assumption that we've made a near-term low here. Obviously, if we break the lows, there's nothing on tap until that swing low 75.70, 75.65 ends up being that 100% extension we rebounded off of earlier in May trade. But certainly near-term resistance 77.30, 77.35 here would be an initial area I'd look for on the upswing. Could pan out. Could pan out. Interestingly enough, you would need to basically move into the upper parallel to fill or to try to even go for a fill of the gap. Largely speaking, a good trade on its own merits, if I was looking at this just without the event risk on tap, does look like a decent support barrier you would look for to see a little bit more of a bounce. Uptrend support could be a nice entry here. Could be a nice entry here. But you're really playing with fire on this one ahead of the release. Just because the back and forth, the implications for the euro and the implications for the pound could see a lot of this. And for a near-term trader like us, unless we're in this for the long haul, you can really get chopped up. So, Mir, hope that helps. As far as euro Kiwi, so here's the deal with euro Kiwi. Depending on how you're looking at this, I have us pushing below. Well, factually, we're pushing below the 2016 Open, and that's what's concerning for me. On a objective basis, A move like this where you see, let me take a step back. So Euro Key has been trading within the initial yearly opening range up until now, meaning the January open calendar month has been the range that we've been trading in all year long. That initial stretch we made into January has been within the range we've been trading in all year long. So on a break of that January low, that would be a yearly opening range break to the downside, which would be extremely bearish. Um, we did close there yesterday, so technically, yeah. Do I trust the move with what's going on right now? Not really. Not really. A basic 618 of the advance off the lows from 2015 takes you into 5660. So it's a tough one. Mir, I would have to say from a technical standpoint, yes, you're coming into support. Is it a bullish trade? No. If you look at the momentum signature since the start of the year, we made 160 break to the upside. Then we've been holding 60s resistance on every subsequent move higher. And here's your first 40 break to the downside. So the momentum profile from my standpoint does look lower. Okay. Now, does that kind of line up with what we're looking for as far as Euro and Kiwi? I don't agree with it because I do like Euro higher right now. And I do like Euro Kiwi up against resistance, right? We talked about that earlier. So with that in mind, I do think we get a rebound off this region. If not, a bounce back into 56.66 first before moving higher. But yeah, I mean, it's coming into some support. If you got some strong divergence there, that would be even better. But yeah, I wouldn't be looking just to fade this yet. I would need to see, and this is something we always want to keep in mind, guys. On a move like that, when you're looking at price coming to support, it's not an automatic buy signal, right? Support's meant to be broken, resistance is meant to be broken. Before you start doing a counter trend trade, you want to start to see former resistance become support. You want to see some structure to the advance. You want to see some divergence in momentum, which on the near-term chart we're definitely getting, right? A series of lower lows. But you get the picture. And before you start fading these moves and trying to catch a low, you want to start to see near-term price give you a series of higher highs, a test of former resistance as support, something like that, to really validate that indeed price has reached an extreme. Mir, does that help on Euro Key? I don't have a scalp set up for you. I'll review this one for tomorrow. For tomorrow's session and see if there's anything interesting on the intraday. But longer term, you're flirting with a pretty severe break here of the yearly open. Now, you're more than welcome, Mir. I appreciate that. All right. We covered Euro CAD. We covered Euro Oz. Dollar peso for you, Eileen. This is a trade. Obviously, we don't talk about it too often. And I should have posted this chart to you guys earlier in the week on the gap. I was looking to see if it panned out. You guys know I don't trade dollar peso, just for the record. Nothing wrong with it. It's just something I've never gotten into. I've never, sitting at the desk playing with the bank's money is not really the place to start messing with real exotic pairs that could not quite have the same type of liquidity. With that being said, you're coming into some major support on the near term. That's this confluence here, which capped the advance in May and now converges on the 50 line after having found resistance at the 50 line. Okay, so look for some support, a break to the downside. Your bullish invalidation level and major key support comes in down here. It's a basic 38.2 of the advance, but more importantly, it's the lower parallel for the operative structure. Okay, you would need a rally towards 1882.25 to fill the Sunday gap. So you're heading into some support. If we do break sub 185300, look for that move towards 1830.87, another area of possible exhaustion, possible area you'd start to look to see a rebound. But right now we're looking for inflection off this region. As a disclaimer, I haven't taken any positions on this, but again, can help us ascertain, what the emerging markets are doing, what the broader dollar move is doing. And certainly over the last couple of weeks has had some really clean rebounds, rejections, inflections off of this current operative slope. So we'll continue to follow this one as well. Eileen says, I guess about as good as watching to trade Bitcoin. Yeah, actually, Eileen, Jamie had a phenomenal trade on that Bitcoin. He closed it out right at the median line resistance line. Um, it took over a year, but it was a beautiful, beautiful trade. Yeah, I mean that was a nice one. So another one that we'll be following, I don't have a near-term setup on dollar peso. Keep in mind the pips for the peso, guys. I don't want to have to remind you this, but they're completely different, and they're a lot. It's a much larger range. So when you look at a quarter daily TR and it's 602 pips, basically discount that as like 60 pips. So just keep it in mind once you're intraday trading this. But looking for some support, and the short side is vulnerable while above 5,300. Okay, move towards 82.25 would be needed to fill that gap. Questions on peso? A quick update on what's going on in the crude market. We do get crude inventory soon. Here's what that looks like today. We are still doing the same dilly-dally thing we were doing yesterday. Okay, we're back above the sliding parallel. Remember, the lower parallel converges on that same key region of resistance right into it. As I said yesterday, guys, I wouldn't be surprised to see this thing probe 51 again before we turn over. But the long side, the rebound, is at risk heading into this key region, meaning I'll be looking for some possible short triggers into that region. Again, a zoom out really highlights how much converges right there. Okay. So no changes on our levels here for crude either. Gold, also something that we'll be following heading into the release. The chart's going to start to get a little messy here as we get into that, but near-term support, still looking for that 1257 level. It's a 50% retracement, very, very simple and basic retracement off the low from last month. Also, I know this is getting a little messy here, guys, but if we take, so this is the broader formation that we were looking at, but if you take a basic slope from here, which ends up being a very basically dead on with basic trendline resistance or support, off the lows, right? Almost the same exact slope. The 50 line of that comes in at 1257, which converges on the 50% retracement. Former channel resistance converges on the 618. Little later in the week, heading into Friday, that's at 1243. So I am looking for a possible move into one of these regions as an exhaustion low near term, which could offer some long opportunities. If we take an extension, okay, off the highs, you can see couple of interesting areas I just want to highlight. This makes the chart very messy, I understand, which is why I didn't leave it on there. But the 100% extension, so two equal legs down, puts you at 1260, 1257. So the same area that we're looking for is near-term support. The 1618 goes all the way down here, and that's sort of going to be our bullish invalidation level for the broader trade. But near term, I'm looking for an exhaustion low at one of these points to possibly give us a nice opportunity to get back on the long side. Depends when it happens. If it happens ahead of Brexit, I don't want to touch it. If it happens post-Brexit on a spike, it might be a decent play, depending obviously on whether they leave or stay. Any questions on gold before we start to move off? Or I think that's going to wrap it up for us today. Yep, those are all my setups. All right, so we will wrap things up here. Again, don't forget, Jamie's on tap at 1 p.m. Eastern today for the midweek strategy webinar to go over some of the longer-term implications and what he's looking at for Brexit. We'll be back tomorrow morning, 8:30 Eastern, for an exciting kind of wrap-up of what we'll be looking for on the sterling crosses, on the dollar, on commodities, heading into the all-important Brexit vote tomorrow afternoon. Best of luck trading, guys. Look, stay nimble. Now is not the time to be doubling down on any of your trades. We'll pick things up back tomorrow morning. Cheers.